Google stock is flashing a warning. Can you see what the warning is? Let me show you without the drawing so it's easier. See this correction? You had the correction into end of early April or end of March, and then you had a rally to a new all-time high. And here we got a correction, yeah, similar to this, and we got a rally towards a new all-time high that failed. You see? That's a warning. So what's that mean? It means when 316 breaks, it targets 272. And when 272 breaks, it targets 200, which is my base case, around 210 for the bear market. So you got a 32% drop to 272, and then take it off the high. We got a near 50% drop to around 209. That's what Google's warning. The pattern has changed. It's sending you a warning. We are correcting off this lower high, and it's targeting 316. If that breaks, which is probable, it targets 272. And if that breaks, I can't say until we first break this and then target 272. It's like similar to where we are now. If we're down here, then I can interpret what's the likelihood 272 will break. So, you know, it's a strong support level. It is, like I say, a 30% drop, 32% drop from the high. So that's a pretty big move. It's a bear market move, 32%. The previous drop was, I think, 22%. So it would be the greatest bear move since this one. Oh, this one was 32% for the tariff tantrum. That was 32%. So this would be a pretty strong move. 32% drop to accumulate into. But the risk is that this breaks. 272 breaks and we target 200 for a huge 50% drop. What am I doing? Well, I'll be accumulating. Say I'll buy some at 316, then scaling in down to 272, and then we'll see if we get the big buying opportunity down to 200. That's what it looks like. It looks like we're gearing up for a pretty sizable drop in Google. That's why it's flashing the red warnings. Yep, it could get down to around 210, 200 to 210, 50%. What more do folk want in terms of buying up? Just a quick video ahead of my next mega article, which will update all of the primaries, all of the secondaries, all of the metrics, and probably well beyond them in medium risk stocks. And I'll take a look at some of the new stocks in the 10x brigade. The 10x stocks, which are up about 15% in a month. I prefer a mixed bag about that. Yeah, I hold a lot of some and less of others. I prefer the ones that I don't hold much of dropped so I could buy. But we're going to get an opportunity because Google is flashing a warning signal that things have changed. See, when analysis is reacting to price movements in real time. Here, okay, we had a breakout above here that targeted a new all-time high. So that's all you can say here. But it failed and it's reversed now. It's targeting 316, a break of 316, which will probably fail, but it's not a done deal. Like this breakout here targeted a new all-time high, which was probable, but it failed. So you have to go with the probabilities. Here it's high, so here you would put your sell limits above the high to take profits, and here you would put your buy limits here 316 down to 272, and then we'll see if 272 breaks. Then you got buy limits down all the way down to maybe 180. That's the best you can do without hindsight. Yeah, that's what you do without hindsight. Here you've seen a breakout. Okay, you're going to trim some above there. Here it's failed. Okay, you're going to start buying here down to there. It could go down to 272. If that breaks, it'll go down there. So you have more heavier. See, the buy limits here is light and it get heavier as it drops. So the heaviest in this range is at 272. And then they get heavier still going all the way down. Like you're buying more shares. Obviously, you're paying less. You're paying 50% less. But here, see, you're trimming over 400 and you're going to be buying at 200. Think about that. That's half the price. And did similar here. Now, if it kept falling, you just keep buying. Yeah, 272 was the buy there. This range from 296 to 272 was the buying range, tight, and then if it broke 272 it targeted 242 and so on. Anyway, there's a quick update on Google flashing a warning signal ahead of my next mega article, which will be first made available to patrons. So do consider becoming a patron by supporting my work for the 9. And this video is a mere fraction of my extensive analysis that is first made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $9 per month, which is nothing compared to what you get access to. I try to do best by my patrons. Folk only need to go read my articles open to the public and the literal thousands of comments under them. Look at this one, 2,200, nearly 2,300 comments under this article, which shows the level of engagement with patrons. Keep calm and carry on buying AI tech stocks as they deviate from their highs. Where the greater the deviation, then the greater the buying opportunity presented. Keep calm and carry on buying. Quantum AI tech stocks. Access to my latest mega analysis, a comprehensive 3-part guide on how to really get rich during 2020. That has exclusively been made available to patrons right now. You can go and read the 3 guides right now, full access, which is a truly epic piece of work that took me the whole of 2023 to write, which condenses down my lifetime knowledge and experience down to some 60 chapters, which is on top of my ongoing analysis and trend forecasts that are made available to patrons for just $1 per month. There are no bolt-on extras, no courses, no other crap that all these con merchants do. You get full access to everything. So, did you buy the October 22 bloodbath, especially in tech stocks, fangs, with the likes of Meta plunging below $100? Well, I and my patrons did. Go read my articles and the comments posted under them. We got well blooded by catching all those falling knives. Did you make the mistake of listening to the likes of Clown Kramer on the Cartoon Network, who stated Meta, amongst others, was finished? Meta finished at $100 a share. It was the mother of all buying opportunities. This clown stated it was finished. Says it all about Clown Kramer and the Cartoon Network.
They're finished. They're finished as places.
They're finished as
places to invest.
We keep talking about this falling knife as if the knife continues to fall. Though there are people who look at this and say,
look, I'm looking at the money coming out. Where's the money coming from to buy to buy industrials? It certainly isn't coming from new people saying, "Wow, it's time to put money in the stock market," because they get such a great rate on the 2-year. I think it's money coming rotating out of companies that have dominated this market for the last decade and into companies like Caterpillar who actually know what the hell they're doing.
Are you thinking that the tech companies that I think that you're disappointed in are going to get religion, if you will, and get disciplined? And what does discipline look like?
You know what they are? I would call them atheists. They believe in nothing.
That's a nihilist.
Meta? I don't know. I think they have to change the name again. They really do. I mean, you can't be saying Meta. I don't know. How about loser? How about stupuda? I don't know. Anything doesn't even matter. I don't know if they can make a comeback. The facts have changed, and I have to change with it. I believed. I thought I'd be safe. I was wrong. Bottom line, forget being leaders. Big stocks are now followers in a post-COVID era, where we're learning that their earnings were far more inflated by the pandemic than we knew. We're just now discovering that tech emperors have no clothes, if they're even emperors at all.
So at least give it a try. Read the comments, see the depth of analysis. You won't be sorry because I do my best by my patrons. Go that extra mile. Gaining access to over 35 years experience. Right from before the 1987 crash straight through to this stock's bear market. That we ride the quantum AI megatrend into the future.